What's going on, Moon Gang? I hope that you're having a good one. This will be a quick wrap up for both AMC and Gamestop for today, Wednesday, May 19th. AMC closed out the day at $12.64, which was a drop of 9.91%, and GME closed out the day at $168.83, which was a drop of 6.55%. Now, obviously, if you're an ape, this is not what you want to hear. Clearly, all of us want this stock to go up, up, and away, but sometimes that's not what the stock market gives us. So my entire goal with this video is to ease some of your minds. I want to remind you that not only have we not lost this battle, but it is far from over. I will be diving into some of the data and some of the technicals, so let's hop right into it. One thing I do want to clarify right off the bat, this was from yesterday. Remember, the utilization rate for both AMC and GameStop was very, very low yesterday. Ortex has made a public statement. When calculating the average utilization numbers yesterday, data from some of the security lenders was missing and therefore not included in that calculation. This was an unprecedented issue and affected daily utilization rates across all 50,000+ stocks we cover. So right there, first of all, shout out to Ortex for making a public statement, kind of explaining to all of us what was going on. But more important than that, that's pretty suspect. Missing and therefore not included in that calculation. I'm personally pretty interested in why were these security lenders not sending over all of the data. But that's what was going on with why the utilizations were so low on apparently 50,000+ stocks yesterday. And before we get into the rest of the Ortex data, just so you know, this is a look at the overall market, the S&P 500. Early today, there was a massive gap down. It kind of related to what was going on in crypto. Crypto was having a very, very rough morning. But from there, it started clawing all the way back. And we closed out the day at this previous support, which has now turned into resistance, just around 410.50. If we hold this, look for it to go back up. But if it is rejected there, I would then be looking for a test of 404. So let's switch it over to GameStop. GameStop, right here, it was on a nice 6-day movement, got rejected at this previous high from April 27th, right at 188. From there, we got rejected, and we are now sitting at the bottom of this trend line. Look for support immediately at this area. If we don't hold tomorrow, I'll then be looking for support at 150, key psychological level, past that 136. If hopefully we bounce from here, we're then looking for that breakout of 188 and then a test of 220. On a bigger time frame, yeah, obviously it's not cool that GameStop dropped 6.55% today, but when in doubt, zoom out. We are on a nice 6-day movement. Over the past week, we're up 16.6%, and from the start of the year until this very moment, we're up almost 800%. Yeah, I get sometimes that intraday action, it can really bum all of us out, but don't forget how far we have come. Now let's talk about some of the data. So today, there was return shares 1 million, borrowed shares 627,000, which means there was a net return of 407,000 shares, and that puts the estimated short interest at 22.11%. The utilization as of this morning was 65%. The shares on loan was around 15 million, but now that we have that net return, we're probably around 14.5 million. And then just so you know, based on the daily average over the past 2 weeks in terms of the volume, the days to cover is now at 2.58 days, which means it will take about 3 full trading days for all the GameStop shorts to get out of their position. Now let's switch it up to AMC. AMC. So once again, let's take a look at the bigger picture. We dropped 9.91%. Not cool, but remember this. Past week up 22.5%. From the start of the year until now, up 500%. Look how right here where we're at, this is so much better than where we've been for almost all of this whole year. If you're discounting this spike at the end of January, early February, and this little period right here in March, AMC is way better off than it's been. I mean, just the price level is higher. That's a win. We're coming off an 8-day win streak. 8-day win streaks, that's a very, very rare thing. It's okay to take a breather from that. Stocks, they can't sustain that type of momentum. Better than that, from a technical level, look at this. This previous resistance at 1222 has now clearly turned into support. That's exactly where we bounced off to today. So what I'm looking for moving forward is, okay, this resistance turned into support. I'm looking for that to hold. Now that the RSI has finally had a chance to take a breather, we have more room to run. So look at this. This is opening up our opportunity to not only test 1450 for the third time, but hopefully an official breakout. I know a lot of people were comparing this current chart action to what we saw previously, and I get it. It looks similar, especially from just a pure charting perspective, but don't forget, some things have fundamentally shifted for the better in AMC, namely the fact that we no longer have to worry about any form of share dilution. We are not carrying that monkey on our back anymore. The dilution is over. So this scenario, yes, it looks very similar in terms of a chart, but fundamentally AMC is a different and namely a better, more fundamentally sound company. Dilution's not a thing. It's over. We don't have to worry about it. There's a lot of suspicion that right here, this came down because Wanda was selling. Most likely they're out of the position or they don't have much more to sell. There are many things that we no longer have to fight about. So I would strongly argue that we are better off here than we were here, even though it looks similar. One thing I do want to clarify for you right here. I was getting this question on AMC. So today, there was a return shares of 14.6 million, borrowed shares 4.84. So there was a net return of almost 10 million shares. That puts the current estimated short interest at basically 15%. To start today off, the utilization was 96%. The shares on loan was 133 million. So if you take this into account, we're probably around 125-ish. We'll find that out when Ortex updates in the morning. And the days to cover based on the 2-week average is around 1 full trading day. I got this question a lot and I just want to clarify. So every single morning, Ortex updates this top row. Every morning, you're going to know the new utilization, the new shares on loan, and the new short interest to start the day off. Then right here, we have some live updates where you're basically seeing the return shares, the borrowed shares, you'll get the net change, and then they're using a model in the back end to estimate the current short interest based on the free flow. There were some assumptions going through the community that this information is 2 days old because of the 2-day settlement. That is just not accurate. It's a misinterpretation of what's going on with Ortex. Like I said, every single morning, this is the up-to-date information on the top. And then right here, these are live updates. I think what the confusion is this whole T2 settlement thing that maybe I didn't do the best job explaining in a previous video. And it only impacts return shares. Return shares, this is where it gets a little bit weird. So today, some of these return shares, a high majority of this 14.6 million was shorts that covered 2 days ago. They cover, as in they buy back into the market, they cover their short position, they wait for the trade to settle, and then they return it. So pretty much this is all live information. Nothing here is really delayed. Yes, when the day gets going, I guess you could say the top level is a little bit delayed because it's just updating in the morning. But in terms of the live updates, that's actually how many shares were returned today. This is how many were borrowed today. This is all fully accurate, but it's weird and I get the confusion. A lot of these shares returned today were because of shorts that were covered 2 days ago, and that comes back to that like T+2 settlement thing. But I just want to clarify, this is all very much live and we're not really getting any, I guess, future prediction from these numbers. It's all live, what's happening in real time. And this just comes back to the fact of like you return shares after the settlement period is over. If there's any questions, please feel free to hop in on a live stream. I would be more than happy to clarify. Please feel free to leave a comment below. But there's a little bit of confusion about like what this means. Overall takeaway, this is all up-to-date information the day of. So that's what's going on right now. We are seeing a decline in AMC short interest. In the end, that's because so many shares are being returned. And that makes sense because the shorts are scared right now. They don't like the situation. They don't want to be involved with us. So they are hopping ship. But the big question is this number big enough for a squeeze? Is this number big enough for a squeeze? The answer is yes. We've seen Tesla make amazing moves that related to gamma squeezes and short squeezes with a short interest around 6%. We are more than double that right now. AMC is sitting at 15%. Of course, the higher the short interest, mathematically, really you're going to see a higher ceiling for where the squeeze could go. But in terms of a squeeze going, in terms of AMC's share price just shooting up to the moon, even if you were conservative and said that 100 million out of the 132 million were short, and let me clarify, that is just being conservative. That is a lot of shorts that would have to cover. That is a lot of buying pressure. And even if we're looking just at the shorts, please understand that we're discounting the potential impact of just FOMO buyers. Good old-fashioned people that they see the stock going up, they want to hop on the rocket, and that's more and more buying pressure. There's no way to mathematically account for that. So the short interest is of a magnitude that a short squeeze is still possible. We're talking about 100 million shares that could potentially have to cover, and then there's no mathematical way to possibly really, like in any formula, count in how much FOMO buying will benefit us. We want any form of buying. It doesn't matter. Just buying pressure is buying pressure. Whether that's FOMO buyers, whether that's naked shorts getting out, whether that's legitimate shorts getting out of their short position, it doesn't matter. At the end of the day, it's all different forms of buying pressure that will benefit us. One other thing I want to point out that I just think is kind of interesting at the end here. So on the bottom, we have the RSI, Relative Strength Index, values of 0 to 100, and it maps out momentum. So as you can see, AMC recently went higher, but the RSI went lower. This is referred to as bearish divergence. It means that there was less bullish momentum up here than down here, and it's commonly indicative of a decline or some sideways trading. Obviously, with this bearish divergence, we saw that decline, and it's playing out as it was technically expected to. So we came up to this resistance, we had the bearish divergence, it was successfully rejected after we soaked up some of that supply, and now we came back down to this support, which was previous resistance, and now we're bouncing. This is good because look at how much space the RSI now has to run. Look at how much space AMC as a stock has to run. On this third test, this is a picture perfect cup and handle. Here is the cup. And then as we come back up, we will form the handle. And if you crack open any technical analysis book, they will tell you that a cup and handle is a bullish pattern. Obviously, there will be a counterexample to any technical pattern out there. It's never ever guaranteed, but statistically, it is a very bullish one. And now that the RSI has cooled off, when we start to come back up, we'll have even more room to run. So the main thing, what I'm looking for in the short term, is for us to hold this level between 12 and 1225. I want to see how it reacts to 1350. We saw some support. We saw a little bit of resistance. I want to see that test of 1350. And past that, I am still watching 1450 as the major breakout level. Overall, to wrap this up with AMC and GME, I fully understand what's going on, apes. This was a painful day. Obviously, we want the stock to rip higher and higher, but if you zoom out, the chart is looking good, the technicals are in our favor, and beyond that, a lot of the data is still favoring our position. So sometimes I think it's important for me to explain that I get it. Sometimes the emotions get the best of us. When in doubt, zoom out and check out the data. With all that being said, I would love to get your thoughts on both AMC and GameStop in a comment below. If you enjoyed this video, I'd appreciate it if you could drop a like, and don't forget to join up with the Moon Gang by hitting the subscribe button. Until I catch you next time, for me and Chair, best of luck in the markets.